Good morning. Good morning. It is a Monday morning. We are waking up with a fire already going in the world and some news breaking first thing to start, at least for those of us on the West Coast of the United States of America. East Coasters have already got their day going and have had some news break in New York. Mario, Fidgetal, Umbrella, Simon, Brian, welcome to the stage. And somebody, please fill me in on what's going on. How's everyone doing this morning?
What's up, man?
Morning.
Hey, Fiji.
Good morning, everyone.
Hello.
Morning, Simon.
Simon, we meet again.
Morning, everyone.
Yeah.
Here we are. from FTX, sorry about the background noise, I won't speak much. From FTX to Genesis, DCG, and now we did one space about Binance, and now we have this. I was just watching a YouTube video about it.
Yeah, I remember saying when we was discussing whether the bull market's in, I said we got three things we need to see until the bull market can be in. One was stablecoins, the other was Binance, and the other was digital currency group. I think we know the answer to where they're going now, but still a bit more to go.
I think the most interesting thing for this for me is I've never seen my legal crypto threads go so crazy. They've been going nuts since about 2 a.m. Application of Reeves test, not just Howey test, that basically allows for a blanket application of securities laws 3334, regardless of whether there's an expectation of profit. Interesting arguments that the expectation of profit doesn't necessarily have to be the person buying the coin, but it could be the companies that create the stable coin itself. In theory, basically not allowing the holders or the buyers to participate in the upside of the profit, but to absorb the downside, essentially. If it goes under, they all lose their tokens. And they're saying that this could be potentially an application to all stable coins. And there's also interesting overlap between the New York jurisdiction, state jurisdiction, and the SEC, and whether both have to actually be incurred in a situation like this. So I'm reading as we go along. It's pretty crazy. If it does get applied, we're going to have a huge issue on our hands.
Yeah.
But one thing you would have noticed is that they just deemed BUSD. Obviously, Paxos issues two stable coins, so BUSD and USDP, which is not a small stable coin. It's a decent sized stable coin. And they didn't obviously give this notice on specifically USDP, and they're still allowed to issue USDP according to the New York Department of Financial Services. So it's quite interesting that they're specifically targeting BUSD, and they feel like there's some failures there that caused the regulator, the New York regulator, to tell them to stop issuing those tokens.
Is that a concern around stablecoins or a concern more about Binance?
I don't know. Well, you don't know, but it basically said on their announcement they're ending their relationship with Binance. So for me,
hold on, Paxos. Sorry for being out of the loop. Paxos announced they're ending their relationship with Binance.
Yes, they did. They specifically announced. So they said, I'll read the first paragraph that they literally put this out like about 2 hours ago, maybe less. It said Paxos, the leading regulated blockchain and tokenization infrastructure platform, announced it will be ending its relationship with Binance for the branded stablecoin BUSD. That was the first line of their announcement.
And what does that mean for Binance now? What does that mean for BUSD?
So I was looking into this. So I was looking into technically what does it actually mean for BUSD. So technically BUSD can still survive, but they will need to find another issuer of the token, because Paxos obviously control the smart contracts on Ethereum. If Binance finds a new issuer for the BUSD, they could transfer ownership of those smart contracts. So it would be a seamless transition to a new issuer. So it is possible if a new issuer is willing to take that risk. Who knows? Maybe Tether comes on board and decides they'll issue BUSD for Binance. I'm just speculating, but it is not saying it's not impossible that could happen.
Yeah,
I think
the question is whether you'd actually really want to do that. So Tether was the USD onboarding for Binance, And then they obviously just, like as all crypto to crypto exchanges, diversified into USDC and then tried to secure their own on ramps. And there's a really big, like, firstly, it was really hard to get banking originally. And then we had the progression with Signature Bank and Deltec that kind of solved the problem for a small amount of time. But now, yeah, there's a real attack on the whole USD banking side of these different issuers. But yeah, the real interesting part, I think both of you covered it in the intro, is the Howey test. So the SEC saying they're suing them for it being a security, and then that ties into the expectation of profit, applying that to the fact that it's the issuer that may be profiting, which is an interesting interpretation.
Sammy, do you want to kick it off? Maybe just for the audience that doesn't understand, just getting the basics out. What's the relationship between Binance and Paxos? What is Paxos? How does it work? Without getting too technical, and then the decision and what it means to the entire process, what it means to Binance and what it means to the markets. Just trying to keep it simple for anyone that's not too technical.
Yeah, so the news is that so Binance wanted to issue its own stablecoin some time back, and they used Paxos in order to do that. And Paxos had created a really, really solid infrastructure to remove lots of different risks. So with the Paxos stablecoin, it was an awesome stablecoin, but it just didn't have the branding. It never got the traction of Tether. It never got the traction of Circle, USDC and USDT. But it actually went the extra mile to do an amazing setup. And so one of their business strategies, it appears, was to use a recognized brand like Binance in order to, it was like a win-win. So Binance said, we'll use your infrastructure because you've eliminated most of the risks with stablecoin. One of the major risks with stablecoin is banks. You know, if your FDIC insures you to $250,000, Paxos created like an amazing structure whereby any money at a bank would not go above the 250,000 FDIC insurance. The rest of it would be in treasuries and various other things, which removes bank risk. And it was set up as a regulated trust company, so that's full segregation, full oversight, and just really did the process correctly. Now, for Binance to do that, it decided that, well, there's a win-win there. Why don't we lend our brand to you and our traction, and we can get rid of, USDC as the main stable coin or Tether as the main stable coin. We can become the issuer. And for Paxos, that was a win. For Binance, they didn't have to do all the bigger stuff. Now, that then led to greater issues. And Dirty Bubble Media started to expose that when people were withdrawing from the US exchange, they were also getting funds from Treasury in the non-US exchange. So obviously, all of these balances and wallets they appeared to be commingled infrastructure. And so it seems that the US is using this as their mechanism to try and get some transparency upon Binance. So, for many, many years, the US and the DOJ have been coming after Tether. And, this is a similar thing like they're doing with Binance. They're using BUSD as the mechanism. Now, what's interesting is, so firstly, it's got two US agencies that have come after them. One is the New York Department of Financial Services, New York FDC. Sorry, I got that wrong. NYDFS. There you go. New York Department. We can't think beyond three letters in an acronym, I think. So they've come after them and said that you need to stop issuing any further units. And they went after Paxos because they have jurisdiction there. And the SEC then said that BUSD is an unregistered security. Now, this coincides with a couple of things. The first is that BUSD became this balance on Binance where whenever you deposited USDC to Binance, they automatically swapped you into BUSD. Now, the fear there is that when they do such a thing, you are creating a possibility for a similar scenario as FTX, where you can create synthetic balances, and therefore you'd need really robust oversight. What we saw with the FTX and Binance side is that when you have these multiple jurisdictions, so you have one bit regulated in one country and another bit regulated in one country, you never get the full oversight. So you could say this balance, this service is in France, regulated in France. This balance is, or this service is regulated here. And so you get this opportunity for regulatory arbitrage when no regulator has full oversight on the auditability of this. Now, the theory was that this was all done by Paxos. But when they mixed the decentralized, well, we wouldn't call it decentralized, but an auditable stablecoin issued by Paxos with a centralized database like Binance, it appears that there is something that the US authorities want to understand here. And then they're using both the SEC on the security side and then also an investigation on how that's used. And to close the loop, it also ties in with the whole BitSlago thing where they try to tie in like money laundering that's happening from Binance via being able to deposit to the Russian exchange that was recently taken down by Treasury, DOJ, and the SEC. So the announcement today is that the New York FD, the New York, I'm going to stop trying to say it. New York has essentially said, stop issuing. And the SEC has said, this is a security. And then Paxos has said, we're ending the partnership. And so if you look at the price of BUSD in a very small scale, it started to depeg. And all of the liquidity pools and DeFi connected to BUSD, they're being drained of a lot of the liquidity.
So I've been looking through this. The SEC issued that Wells notice, right? Which is basically just, hey, we're going to potentially do a thing. But Paxos has decided, as I can tell, that they're just going to end this. Like they're not even going to attempt to fight it. Am I reading that correct?
I think that's what they're doing, yeah. And I personally like that would be the right type of thing because it's that centralized versus the coin thing that they probably have no transparency on. And if you remember back to some of the earlier roundtables we did, it was that when you the part of their regulatory conditions is the full disclosures and understanding of the product. So, for example, on your platform, you need to say what the risks are, whether it's FDIC insured, whether it's not. And if you're just suddenly depositing USDC onto Binance and then it becomes BUSD and you've not seen any of the risk disclosures or anything, then I think the SEC is trying to say that this needs proper disclosure because if the FTX scenario happens, then people need the transparency of a security so that they know what types of risks and who's appropriate for this type of
so
product.
Likely
yeah, my understanding is that it's not BUSD in general, right? It's just BUSD pegged to Binance and their concerns of undisclosed support basically for the token, but that all other stablecoins or BUSD issued is not necessarily covered by this. Is that correct?
When you say BUSD, do you mean the Binance Smart Chain or do you mean the stablecoin? So it's just the stablecoin BUSD is, from my understanding, that's what they've said. You can't issue anymore.
So there's two of them, right? So you've got BUSD and then Binance issues Binance pegged BUSD, which
oh right, I didn't know what that
is.
Yeah. So, but they're effectively the same.
Are.
So Paxos only issue BUSD on Ethereum blockchain. Right. So if you want to get BUSD on other blockchains, Binance maintains that bridge. So it does seem that it's backed 1-to-1 at the moment. So effectively, they would hold that BUSD on Binance would hold that BUSD on Ethereum for all the other chains that BUSD is on. So they're the central entity that controls that.
I've just been trying to wrap my head around, like, what is the SEC seeing here? And I think, to Simon's point, I think it's that Binance was issuing BUSD in exchange for USDC, and that part wasn't within their jurisdiction.
Yeah, it creates the opportunity to create a synthetic balance if you don't have full audit and oversight.
Yeah. So Tree of Alpha tweeted that the main reason behind it was that due to KYC AML behind Binance. I think he tweeted out. Let me just put. I don't. He's generally quite accurate with his sources, so I don't think he would tweet false information. But it's still not 100% confirmed. But he said Paxos violated its obligation for tailored risk assessments and due diligence of Binance and BUSD customers, according to the New York Department of Financial Services. So that's effectively why they're shutting them down.
Okay, so nobody can do due diligence on Binance. It's not possible. So if you were to enter into this relationship, they'd expect you to test the money laundering processes and AML processes, which in theory, Binance probably has 65 different AML policies. So I think it's the lack of the ability to actually ensure that it's in compliance. So remember, for years, Binance had the kind of freemium model where you can get on board with no KYC. Now, if people then start sending a smart contract for their stablecoin balance, you can imagine there's all sorts of mitigate things that they need to go back and
too many different ways to get around it. Yeah. So my question then is, how did Paxos just let Binance mint BUSD? Because that's what it seems to be the concern is, right? Like, is that essentially Binance was allowed to mint BUSD in exchange for turning in USDC, USDT, whatever it was. How did Paxos allow that?
Well, technically, Binance did not mint BUSD. Paxos still minted the BUSD. They minted it on behalf of Binance. That's where we need to get it right. So Paxos was still the authority that minted it. Binance weren't able to mint BUSD.
And U.S. companies
that's how
are
it
supposed
definitely
to
should have been
do business with Binance.
Sorry, Simon, go ahead.
No, I was just saying that's how it should have been set up, and I imagine that is how it has been set up. But then it's just the centralized part, right? So this is a way in to get transparency on that because of that move. It was a bad move, and it was just to try and take down, get market share from Circle and Tether when they had a good thing going on. They should have kept it that way.
Yeah, what I'm reading is that they authorized issuance of BUSD or the stablecoin on Ethereum, but never on the Binance chain. And it's the under-collateralized issue that they're afraid of because they don't have the auditing capabilities on Binance itself, is what I'm reading.
I wouldn't call it a security, but I definitely think
I think the bigger issue is, does this go
right?
against all stablecoins that aren't properly registered in terms of risk mitigation?
Yeah, I think the security part is it's an interesting debate. It's definitely debatable because of the whole expectation of profit. So, but what the SEC, I think, and firstly, Howey test is not everything. There are other, case law for other tests that have been used to define an investment contract, but Howey test is the most commonly reported. But
yes, Simon, it's the Reeves test, which covers anything that's not necessarily a note per se. And actually, the Reeves test proposes that if it's not under the list of otherwise not exempted, should it be added to the list as well? So it's a growing list that actually covers everything that could be covered by the Howey test, but is not necessarily traditionally covered by it.
Yes, I think it's very disputable if they want to fight, but do they really want to fight because of the the document requests that would come from a fight? Because clearly, I can't imagine Paxos having the ability to audit Binance to the standard of being comfortable with their policy. And maybe if that goes deeper, that's why it would just be, yeah, we're walking away rather than fighting. But the security part is, I think, what the SEC is trying to do. So if you look at the staking thing, they didn't say staking as a security. They said staking as a service is a security. So the reaction to Celsius and FTX is, that any service conducted by a centralized company that sits on top of these decentralized protocols, it introduces a layer of centralized risk that requires the level of disclosure that a security has. And people need to know what they're taking if they're holding their balance on Binance, or they need to know what risks they're taking if they're staking on Kraken, because Kraken, if at the end of this someone becomes like an unsecured creditor, as we've seen in many of the Chapter 11s, then people need to know that they're putting an appropriate level of risk to that. And that's what I think the SEC is trying to get this down, that there is disclosure on the counterparty risk. So even though the service staking doesn't really, may not entail much more risks beyond if you were doing it yourself, when you add the centralized platform, you could end up an unsecured creditor, or you could end up losing all your money as a result of something else that was done on the exchange. And that's where I think they're trying to drive everything into. We know how to disclose under securities laws, and maybe we're the most appropriate regulator rather than some of the like FinCEN or some of the other money service type businesses.
Yeah, I think it comes down to, from my understanding, is that if it's not backed by a dollar, it's inherently a security one way or the other, and therefore you might as well register and give the risk information to the consumers. So, from my understanding, Paxos is backed dollar by dollar, correct?
Well, yeah. I mean, if you were dollar by dollar, you'd have massive exposure to the banking system, and FDIC only covering 250,000. So you have to diversify the risk so that you're in treasuries, and then you're not subject to bank risk. You're subject to the government going bankrupt risk. So then you start to diversify, and when you start to diversify, you have the ability for the stablecoin company to make profit. And then you might go a bit further down the risk curve with a percentage, and you might say, well, let's do repos and commercial paper. And suddenly you're a fund manager. And if any of those investments go wrong, you have all the disclosure requirements of a money market fund, essentially.
Yeah, because they were
And not to go ahead.
well, they
please.
were backed dollar by dollar and then backed with T-bills, right? If I'm reading and looking.
Yeah, which is the security.
Right.
So
So you are a fund.
it's not dollar by even dollar by dollar is misleading, right? That's what the Tether case was. They said that's a very misleading term. You're backed by cash and cash equivalents, and there was also a loan, an intercompany loan, when the bank confiscated. So you just got to look at the Tether case. A bank that they were using in order to fulfill redemptions was convicted of money laundering, and then suddenly the government confiscated 850 million, and now it was no longer back. So they replaced that with an intercompany loan between Bitfinex and Tether, and now you've got to assess the risk of that loan, and then the counterparty risk with Bitfinex. So the only way to run a stablecoin profitably is to invest it, and then you're relying upon, and that's why Circle they brought in BlackRock in order to manage that, and then they can take advantage of Aladdin and their AI algorithm in order to manage that and all the risks.
So I think the interesting thing comes in whether things are deemed commodities and whether they're also be able to be deemed as securities, right? So USDC and USDT are determined to be commodities currently. That doesn't inherently make them immune from securities analysis, but from a the sky is falling chicken little perspective, I've always wondered why securities were such a hot topic for the government to regulate. And in my mind, it's always been because of currency control and taxation. At the end of the day, I don't see a bright line here that can be drawn that doesn't allow basically every stable coin, one way or the other, to come under jurisdiction of some kind. Do you disagree?
Well, yeah, you've only got two paths you can take from here, right? One is you register as a security, in which case all of the only exchanges that would be able to make a market between cryptocurrencies and stable coins are ones that are registered as security token exchanges. Or we'd need to implement blacklisting and sanctioning of the US into DeFi protocols, which would require on-chain KYC so that you can sanction certain countries, which then you just lose the whole DeFi mission there. That's the only two directions you can go. You either comply with the US or you restrict the US. And that's yeah. And so other than that, then the US will always be able to take jurisdiction. Now, although the exchange of cryptocurrencies is banned in China, they don't enforce because they'd rather have the data, and so it becomes a geopolitical issue. If nothing else, it's definitely a central bank digital currency and geopolitical issue in the end.
And because some of these protocols are on chain, realistically, even attempting to restrict these things geographically isn't even possible.
You're cutting out mad scientist.
Oh, okay, sorry. I was just to say I don't think it's really even possible.
But I think
protocols.
I think the question about
we can't hear mad scientist if someone else is speaking.
No, I lost mad scientist. Did you lose mad scientist as well?
Okay, I can hear Mad Scientist, but I will drop him down and bring him back up. There's also somebody else on request that I cannot see right now, so if you can bring up Catskill Crypto if you see them on request, that'd be awesome. Just like one of the quick put-ins as a reminder to everybody, this morning we woke up for live coverage of this kind of breaking story of Paxos and BUSD being investigated and sued in New York. By the U.S. government and the SEC. We're following that story closely, and we are trying to stay up to date on it. If you want to join in on the conversation, or if you have any questions or anything to add, please drop it down in the comment section below. We will get to it and we will keep you in the loop. We appreciate you all for coming this beautiful Monday morning to the Roundtable's live coverage of this breaking news story. My question is, how much does this, besides being a U.S. regulatory thing, how much does this affect like the greater crypto market and Binance as a whole, being that Binance isn't even necessarily a U.S. based company, right? Like they're an international company, so to speak, correct? Or am I wrong there?
So I guess from a protocol perspective, the biggest thing is if Paxos is labeled as an unregistered security by the SEC, I don't see why USDT and USDC won't, because the mechanics are fairly similar. So I don't, unless there's something that they SEC have picked up that is fundamentally different on how BUSD operates versus other stablecoins. Basically, they can go and say every other stablecoin is also an unregistered security. I guess that means if no one can issue stablecoins, that's from a kind of protocol perspective, that's kind of like a huge miss, because a lot of protocols were built because of the fact that you could rely and utilize stablecoins within it. Like, I mean, the biggest example is Aave. People put their either deposit stable coins or use stable coins as collateral to borrow or lend. Imagine they couldn't do that anymore. Aave would, I would say, would pretty much lose most of its TVL. So, the biggest lending protocol would pretty much not really work anymore, I would say, because you're going to deposit Bitcoin to lend Ethereum. Or whatever, that doesn't really make that much sense. So I think the impact is huge if it's if it's across all stablecoins that, that effectively let's call it a broad-based ban. But what would that mean? It would mean maybe, I looked at it. Well, what happened with FTX? FTX went offshore. So does that mean that issuers will become like USDT and they go offshore? And it creates.
That's actually not quite the case. So USDT is a registered money service business in the US. They're definitely offshore. Don't get me wrong. They're not a US company, but they are a registered MSB. There's a lot of misinformation about them out there.
But I do want to mention something. Hold on, guys. I do want to mention something breaking. So, Simon, you with me? Can you hear me?
I can hear you, yeah.
So I've just got a message here. I wasn't listening to you guys, just on a few calls in the background. And then I'm just going to read out the message. I have to take out some bits and pieces. But the U.S. Department of Justice also has now got an indictment against CZ in the works. And the source that sent me this is a source that I could trust. They cannot say who their source was, but I cannot say more than that. But the apparently the DOJ does have an indictment in the works against CZ. Not sure if that's public knowledge. Is it? Has that been? Because I'm not keeping up with the news recently. Is that public knowledge? Is that surprising?
It's definitely not public as far as I'm aware.
No, it's not. But hey, this is Catskill. I've been saying this for, I don't know.
Yeah, this is the I told you so. Yeah, this is the I told you so moment. Go ahead, bro. Tell us.
No, but the thing is that I've tried to lay out a coherent case, and I know a lot of people have said that I didn't have any evidence, and I guess the only evidence that I can give people is the fact that I have 25 plus years of trading and financial markets experience to tell you that everything that I've seen since day one in all of the crypto markets, it's not just against Binance, but I think Binance has just done the best job, and that's what I've said. They've been the best criminals, and I think when you have a chance to put your hand in the cookie jar and there's nobody doing anything about it, then and you're minting money, I think you just keep doing it until you get caught, and I think that's what's catching up. And we also spoke about, and I know Umbrella and Simon did a great job of the same thing with this stablecoin. I mean, this is the exact same thing that I was saying back then, and nobody seemed to have a problem with it back then. But I think this is why the New York Department of Financial Services does have a problem, and I think the investor protection issue is that if you're converted into BUSD and it is synthetic, like Simon talked about, you're not protected at all, and because it's so opaque, you can't see, and so I think there's definitely an issue there. I don't quite know why it fails the Howey test, but I'll leave that for people smarter than me. But I think ultimately what I've been saying about Binance, and I don't think they're insolvent. I've continued to maintain that. And as somebody in the crypto space, I don't necessarily want to see them go down, but I also doesn't make me feel warm and fuzzy inside that one of the wealthiest guys in the world is made all of his money by defrauding his customers and basically skimming and cheating every place possible that he could. And I think, maybe if he goes down, Binance survives and they clean it up. And that's probably what will be, in the best interest of the industry. And I just think that they're probably taking every single bit of inside information and just doing everything that they can to skim and basically make money, front running order flow. I know lots of people were talking about that with FTX, and I just think they're using all of their intelligence to do whatever they want. I think they're illegally shorting, naked shorting, which is conversion, that's theft, that's stealing, it's fraud. I mean, it's so many things. I think that there's so many violations, and if I was CZ, I wouldn't have a domicile in a jurisdiction like he did, and I'd be hiding out in Dubai too. But I'd be happy to dig into any of this anymore, that if anybody has any specific questions. But obviously, I think that the main issue is, like Umbrella and Simon said, is that I think Binance is issuing synthetics, and there's no way to compare and get a one-to-one. And the New York Department of Financial Services probably just put a stop to that. And that doesn't necessarily mean Paxos was doing anything wrong, other than that partnership that they had in lending their name and allowing Binance to do that, which is probably where they got into the problem.
But surely if they're doing, Binance are doing illicit activities using BUSD, Paxos should, through its, as they stated, if that statement was true, Paxos through its risk assessment should have seen that. You're not saying any of that happened, but I'm saying they should have seen that. So Paxos should be held liable.
But
Yeah, no
Umbrella,
chance.
how, yeah. So, but I guess the issue is because of the opaqueness, they can't verify the supply, and it just would make sense. And this is the other issue I have with a lot of what Binance says too, is they can say that they have, enough money to back up the deposits, but is it backed one for one? And then are they trading against, customers? Because again, it's just, if they're converting deposits when they get there, this is all the opaqueness and this is all the gray area. But the reality is that if you don't have agreements with them to do that, I don't know. There's so many problems, and Simon can probably speak up to this, because if you send Ethereum and they may, immediately it hits their exchange and they take the Ethereum and buy Binance's, which I think they've been doing. That's something that I've been saying, and they turns out it looks like they own all the, Binance float now. Is that legal? And then is it backed one for one? I mean, that's another question, because if you sent Ethereum, but they hold Binance against it, I mean, these are where all sorts of problems come in. And this is where I think it's just the beginning of this thread where, yeah, there are technicalities, but the thing is that it does back into all sorts of fraud and all sorts of illegalities when it comes to all these different, financial rules and regulations globally.
Well, and the main question too there is really what they're using to enforce this and what they're using to go after this. Like you mentioned, the Howey test. Like I don't know if anybody else had seen over the weekend or on February 10th. So what, Monday or Friday? Another CEO to to an exchange, Emini FX cryptocurrency exchange, got arrested last year and actually like over the weekend pled guilty to one count of commodities fraud Friday and have forfeited $249 million in cryptocurrency assets from the exchange itself. So the government has been even quietly going after and taking down a lot of these exchanges and a lot of these people through various means. And I think the precedent, and Fidgetal, you can speak more to precedent and legalities than I can, I bet. But the precedent set here is going to be massive in the direction of how they establish the rest of the regulatory action that comes down the cryptocurrency chain. And that's like one of the kind of scary things is as well to watch out for, is like what they're throwing around in terms of prison sentences and this and that, right?
It comes down to more about what at this point with an action like this or actions like this, there was no real reason why the SEC had to get involved. The New York Department of Financial Services already was involved and has jurisdiction over it. So the real question is, why did the SEC get involved, and what are they trying to do larger scale? Is what I'm really looking at, especially when it comes to Binance, because they are the largest crypto exchange, and the larger issue, from what I'm understanding, is under collateralized. So essentially saying if you added up all the BUSD globally, but there's no way that could have it collateralized, and using that as a blanket argument essentially to go after Binance in any and every way they can, especially when it comes to stablecoins. That's what I'm hearing. If anybody else has any thoughts, please.
Yeah, but I'm also hearing there's a lot of kind of, and it would be good if we got Andrew, and he's saying that effectively the SEC is going after the whole of the crypto ecosystem, including, we saw they went after Kraken, but they were also going after Circle and Coinbase. Specifically, Coinbase will be their staking program, and Circle would be the USDC issuance. So it'll be interesting to see how that plays up over the next few days or weeks, and kind of I know the speculation that's just a matter of if not when, in terms of what notices they put out against I guess those two other key players within our industry.
Yeah, I think the SEC sees itself as the one the regulator most equipped to deal with disclosures, and I think they see all of these issues, disclosure issues, that when people are using these platforms, they need to know what risks they're taking, and it's all of these are opacity issues, and if you think about it, if you're so the key difference, right, in TradFi, you separate out all the different functions, so you don't have the issuer investing in and then operating the exchange and they're also the VC, and they're also the hedge fund, and they're also the clearing house. They're also the issuer of the currency, and all of the different functions. So for decades, everyone in TradFi and every crook in the world has tried to abuse that system. And then you come into this segregation. So, when you have futures markets, like what's the FTX scenario? So the FTX scenario is that you had custody, which was the exchange, and then you could opt in order to lend that crypto in custody, and then it would turn into a loan contract, which was the other side of a derivative. And therefore you needed like full segregation of those funds because the custody is always meant to be there. But then you had the hedge fund that came along, Alameda, and said, well, we're one of the customers. And so they blew up the whole thing by having God mode and the ability to circumvent all of their risk controls. And so the same thing exists. The ability to do the same thing exists within Binance. And the issue is not whether they're doing it or not. Obviously, that becomes an issue. The issue is that it's possible, and none of us know. So, in that sense, when you don't know, Binance itself, just depositing with it becomes a security because you're putting your money in there without understanding the risks that you're taking, because all the different products, one product could blow up and that could take down another part of it. And so what I think the end game that the SEC, you either take the conspiracy theory route, which is they're just trying to turn everything into TradFi, or you take the route that in the end, all of these platforms need to operate with the same level of disclosure so that people, when they're engaging in these platforms, they know the risk, and also they consider it a suitable risk. So you don't end up in the Celsius situation where one person telling you put your lifetime savings in here, it's low risk, it's better than a bank, doesn't mean that you end up losing your whole retirement funds. That's where they're trying to get in the end, and they want that in the crypto market, I think. Now they can't lose their competitive advantage, so it's also not an option for the US to be excluded from this market, because
that's the biggest part, right? The biggest part becomes
yeah.
How much do you regulate and how much do you scare away inevitability, right? The Binance isn't going anywhere. How much do they lose if they lose the US market directly versus VPNs? So how do you tread in terms of disclosure requirements and registering versus, or in this case, actually stopping the minting of a token and then ensuring, right? They have to ensure that it can be liquidated, and what happens if they can't. But I think that becomes the biggest play here is how much does the SEC overplay their hand? And there's a flight of capital and a flight of human capital, and balance that with regulation, KYC, taxation, and consumer safety is what I'm looking at.
Yeah, the VPN thing shouldn't be a thing because there's no regulator in the world that allows you to circumvent the requirement to know your customer and find, you can't comply with travel rules and AML rules, which every jurisdiction in the world has. And if they don't have it, then Financial Action Task Force would have blacklisted them at this stage. So there is no way that a VPN circumvents unless the exchange you're using is non-compliant. Because I mean, the risks that we're regulated in Cayman Island, and they're so much stricter than the US in terms of their actual rules and the requirements that we have to put all of our customers through. And there's no way a VPN you couldn't VPN past our system, because we'd have to have robust systems to know that you are who you say you are, and you'd have to commit fraud and put a gun to someone's head and try and get them to match a selfie. I mean, obviously fraud can happen, but if someone can use an offshore exchange just through VPNing right now, then that they've got an issue that's going to come in their country.
Doesn't that put us in a odd place when it comes to the decentralized protocols, the Uniswaps, the Aves, etc.? Because I mean, they can't, and they already exist on chain.
Yeah, this is the real tension, because peer-to-peer is the solution. Bitcoin only exists today because there was no centralized entity that they could attack to take it down. And so they've already started to, the very first case I saw of an attack from the SEC on decentralization was when they did one of the early DEX, Ether Delta, and I was a shareholder in Shapeshift to implement KYC on. And the peer-to-peer part is the solution, because by taking out the firm in the middle, then you don't need to outsource policing to the financial institution, which is what all the AML regulations have done. They said it's your job. You go to prison if you allow AML to happen knowingly, and you need to have robust systems within your company. So the tension is definitely the decentralized part, because to me that's a net positive. When Bitcoin allowed people to transact peer to peer, and you didn't need a financial institution in the middle, and you could control the on ramps and off ramps, and then you create an immutable record of your activity on a blockchain that law enforcement, then they need to do the job rather than outsourcing it to the financial institution. But yeah, you've got the issue
But
there.
when we talk about too, the disclosures, right? You have to disclose your products, what they do, and what the risks are to them. Is an open source product that exists on chain sufficient to meet that?
Well, I guess you're going quite far into the future, because I believe regulations is code in the future, and it's that you haven't really not disclosed, because the code is the disclosure, right? All of the risks are known in there, but the average person is not appropriate to be able to analyze the risk, which is why so many people lose money in smart contract risk. You're in a very philosophical debate, which actually is the debate of all debates. That needs to be resolved in the decades ahead.
I mean, are people able to understand most of the financial products that exist, even in the TradFi world?
Just disclosing it and then you tick boxes is the way that people do that. It doesn't solve the problem. It just, if you have to go to a regulator and disclose it, and you're going to go to prison if you don't get it right, you're going to take that quite seriously. But it definitely doesn't solve the problem. It just
CYA, right?
But that's the biggest point is just disclosure and repercussions. That's all. At the core, that's what they're trying to say is disclose. Then there's repercussions if you don't abide by stuff. And decentralization, or not abiding by that and not registering, is the risk in and of itself, right? So, mad scientist, I know we can go in circles as to do people actually click through agreements. It's been a contract law issue since day one. But the question becomes, what's the repercussions, right? And that's really what we're looking at with FTX, and how do creditors get paid, and in what order, and essentially mass consumers, retail, eating the shit at the end of the day. So if you do disclose, regardless of the cost of that, the cost is there so that there is repercussion, unless I'm mistaken. But I think that's the circle of life there.
Yeah, and it's also worth noting, this is not actually just regulators. Do you know how many people invested in Celsius, invested in Voyager, invested in FTX, and will be contacting their regulators saying, I lost my money because of you. You failed us. How did you allow this to happen? And that's why accredited investor rules exist, because they say, well, whenever retail lose money, we get 1,000 complaints, and we are told that we failed our citizens. And so, it's not just regulators that do this, it's investors that demand this as well. And you're like, well, I come from a libertarian, not my keys, not my coins, I figured it out, I take full responsibility. But a lot of people don't do that. So this is the debate of regulations, and the compromise they came up with is those that can afford to lose a bunch of money are the ones that we're going to allow to lose it. But then that's where it gets back to the decentralized space, because everyone can invest in Bitcoin, and Bitcoin is fundamentally designed to long-term act as hard money. So Yeah, we're in the philosophical debate, but I think regulators, this isn't something that we've brought. This is what regulators have been debating for decades, and that's why they most likely want the SEC to do it, because over the decades since the Great Depression in '33, every shenanigan that could possibly happen, and they still happen, they've tried to implement new requirements in order to say, and it's the same thing that keeps the issuer out of prison, which is you want your customers to know the risks, unless you're deliberately trying to deceive someone and not be fair, clear, and misleading them.
Exactly.
Because you want your investor to know the risk, because you don't want them to invest their lifetime savings if this is a high risk product, and that's the same thing that gets you in shit as an issuer, and that's the same person that loses all their money because they overexpose themselves is the person that you need to protect yourself from when you're selling these investment contracts.
Agreed. And it's good to finally have another attorney on this space. Peter, welcome. From a legal perspective, where I'm dancing, Peter, are you in the legal thread I'm in on Telegram?
No, I don't believe so.
Okay, so the interesting questions that I'm being addressed and trying to cover is the difference between, is this an attack on stablecoins? Is this an attack on Binance? Is this an attempt to apply Reeves generally to all stablecoins on the back of Howey? What are you seeing from a legal perspective here in terms of precedent? Why the New York Department of Financial Services and the SEC would one have been better than the other? Your thoughts here?
Well, I mean, I think this is just a case of that whole come in and register business. I think the SEC certainly is looking to enlarge its power. And I agree that the New York department pretty much had this under control, and it's kind of weird that the SEC is piggybacking on it. You saw in Commissioner Peirce's dissent from the enforcement action earlier against Kraken, like it's all well and good to say, come on in and register, which I think is fine. I agree with Simon's point that when you're issuing assets in a speculative asset class world, like registration, in a vacuum is good. But the problem is these registration requirements are not everything they're cracked up to be. And it's just not so easy to say, hey, we've got this, this, and that, and therefore we're all good to go. It just doesn't happen. So I think basically the SEC is trying to get everybody to slow their roll in a way, so they can just kind of scare people into not doing things while they even figure out what the hell is going on.
I'll tell you this much. I'm in a bunch of conversations with heads of some of the largest legal and heads of some of the largest crypto companies, crypto exchanges. I won't name them per se, but their compliance is not allowing them to come up. I think everybody is really taking a moment to absorb what this is before they're making public statements, understandably so. So I think it's important for us to actually kind of speculate, because the larger institutions are not at the moment, while they're waiting to see things unfold. But in my mind, I don't see, to your point, Peter, I don't see this ending with just Binance and just BUSD. I think this is the first step towards stablecoin regulation across the board, because again, I never understood why stablecoins were in the crosshairs. The argument that I mentioned earlier, that somehow it could be the expectation of profits could be the company itself and it taking the profits, but somehow that not necessarily being a risk to the consumer unless the company fails, for me is such a broad argument. To say that if any company fails, it therefore has to register, just seems like a really, really broad-reaching argument.
Yeah, I agree. I mean, the only counterpoint would be specifically regarding the expectation of profits. That's a prong of Howey, but Howey is only about investment contracts, which are one flavor of security. But the actual acts, define all kinds of different flavors of securities that don't implicate Howey at all. But yeah, it is weird that, the stable coins would be where people are targeting their fire right now. To the extent they're upset about stable coins, I think the kind of underlying governmental philosophy there is like, hey, there is a stable coin. It's called the US dollar. Get the F out of here.
No, it's bigger than that. There is a stable coin. It's called Fed coin. Get the F out of
here. There you go.
And I just want to put in a little bit of like semi-breaking news that Brian Armstrong's actually in Washington currently, CEO of Coinbase. is in Washington with meetings scheduled today, basically to talk about all of this regulatory action and to talk about all of this stuff. His last meeting just got canceled. He posted on the timeline 28 minutes ago. So if everybody wants to, let's try and use the power of this room to try and get Brian Armstrong, who's currently eating soft serve ice cream, into the space to talk about all of this stuff. Go on down to the comment section and tag him, asking him to come on in, or comment on the post above that I pinned. But it's interesting and kind of exciting to see at least one mouthpiece of the space that's not SBF or FTX driven in Washington currently to talk about all of this stuff, because it's sorely needed, especially in this time. It's something that we need more of, those voices that are kind of talking from our place. And Coinbase, out of all of those, is still like a publicly traded entity and publicly traded exchange. So it's not like they're necessarily speaking in our best interest, but it's a bit better, is it not?
They're not
No,
actually
yeah, I
a
mean,
publicly traded exchange, honestly. Sorry,
yeah.
Simon. They're-
Coinbase is an interesting one because they've actually I know they've got the registrations they need because they bought our US broker and ATS, which would allow them to trade securities. They bought it off us in 2018 or 2019, I can't remember. So they already have this, but the issue is, the tension is that the SEC wants all the exchanges to be security token exchanges, and registered broker dealers with disclosures on these offerings. And I know because we had to build the user experience for what it's like to register to qualify for a security. No user wants that user experience because it's you got to upload a bunch of documents, you got to disclose your net worth, you got to do all the things. So the tension is just simply the crypto exchanges, for as long as possible, don't want to comply with securities laws until they absolutely have to. And I think the SEC is saying, now you have to. But that's balanced with that tension of DeFi and international competition, who are putting together awesome virtual asset service provider rules, which are not as draconian. You know, they're not shoehorning these protocols into securities laws, because they don't quite work when you don't need as many intermediaries in this technology. But all
there's
the internationals are doing it really well, and the US are just saying, no, we want the SEC to do it.
So a lot of the international, the Western international countries are actually following a lot of the US's rule, and we've actually seen Gary Gensler approaching the G9 and others in order to unify these things. Now, remember, a new set of regulations is coming, to which 200 countries are obligated to change their regulations. This is not actually something that is a new rule. There's always been a requirement that securities be traded on something that is a regulated entity. Now, for Coinbase, one of the reasons they had that, that potential class action for 79 unregistered securities is because they're not a securities exchange as well. They're an ATS, which is different from a registered securities exchange. They're a public company. That's different from being a public exchange. That's different. The very interesting thing. So remember, first of all the rules are changing, and we're going to be seeing a lot more of rules like this. The thing that I thought was actually really remarkable was something that I replied to Jesse Powell's tweet, where he posted a video of Gensler saying, "Oh, this is so easy." He's been posting these very cheesy videos. I don't really understand why, but he posted this video of saying it's so simple for you to just do this. And this is a very strange thing. First, Coinbase literally was trying to do exactly what Gensler was saying you have to do in order to have one of these, a staking or potentially a lending program. But the staking aspect of it is literally exactly what Coinbase did. And they were greeted with a Wells letter, which basically says potential enforcement is coming. And there was the whole thing. And truthfully, I have a lot of criticism for Coinbase on how they actually conducted that. But according to Gensler, that's basically what they wanted. So according to this video, you have to go in and here's the requirement, and there's a very simple website link or like a web form that you have to fill out. However, the thing that he's saying that it's the law is a rule that is a proposed rule. It's not actually a final rule. Nobody's required to comply with it yet. This reporting requirement that he said everybody has to comply with the reporting requirement, but that reporting requirement isn't actually a law yet. So it is based on the Dodd-Frank rule, right? That was passed, but the SEC has only complied with one part of it. The SEC publicly lists all the different parts of the Dodd-Frank rule, or all of the rules that they're required to create regulations in compliance with those. And they say, we've done this part, we haven't done this part, we've done this part, we haven't done this part. And they have only done part of that particular rule as it pertains to open-ended funds, which is not what Kraken and Coinbase are doing, to my understanding. There's also, if you look everywhere on the SEC's website, because they said it's an easy form on the website, I prowled through that. There's no easy link. Where is the thing that says, "Hey, I want to disclose all of this stuff"? It's not there. So
Obviously,
I mean,
the
just 1
crypto.
second, Digital. But my only point about this then is that I'm almost done. I'm sorry, just don't lose the train of thought. But my only point about this is that there is, and I am not somebody who's like, oh, the SEC sucks, it's stupid, I worked there, right? So I'm not anti-SEC, but I am, realistic about things. And first, things are going to change, and it's good. But at the same time, saying it's so easy, you could have just signed up, that's all we were asking for, that's crap, honestly. I mean, I looked at it, I said, okay, if I'm Kraken and I'm going to sign up for one of these things and all I have to do is disclose our staking, then where do I do that? How do I do that? It is not there. If somebody can find it, let me know. But I mean, I'm pretty good with that site, and I couldn't find it. And so then I thought, well, maybe they're talking about one of the FINRA rules, because there is a disclosure FINRA rule. That isn't what they're talking about. So I think that this is all, this is a major problem. And the problem that we have here is that a lot of the rules that exist right now, it's not that they don't work for Web3, right? For blockchain. They don't work for anyone, because they're predicated on a set of people that are no longer required. They haven't been required since 96, roughly. So without this core group of people that are the trigger points for so many of these regulations, we're going to see more and more stuff like this, where it's like, oh, well, you're supposed to fill out these documents. Really? Who was supposed to do that? Originally, it was the broker dealer. And that's the problem, is that our system no longer reflects the system the rules are predicated on. Thank you very much.
Yeah, Simon, before I go to Simon, obviously I mean, anybody who has half a brain and has done anything in finance or crypto for a minute laughed at Gary Gensler's statement about all they had to do was go to the website and click a button. Like, the fact is, the reason why most companies don't register is not because they're trying to avoid it. It costs about, if I'm not mistaken, $5 million to fully register. Simon, would that be correct? Something like $5 million to be completely compliant, and even under. Go ahead.
So no, it depends on what you're doing, but so generally speaking, the total amount, not INX, because that was a crazy circumstance, but for the most part, it's usually around between 100 and 200K, but that's not your ongoing requirements, right? That's just to get through the original process. Now I understand it's actually been considered much higher, because people are hiring multiple sets of counsel on different aspects, and that just jacks that price right up, because they're
The fee is
bringing in
not the fee is not to the government. I think the fee is about legal and
lawyers.
compliance.
It's the lawyers. Yeah.
Yes. Simon, you had your hand up. Thoughts, please.
Yeah, it's a complete joke. Right, so it's true and it's not true. It's true if you want to deal with accredited investors, in which case it's true. They've got lots of exemptions. They've really nailed that process. if you want to deal with retail, and I know this because we've been trying to do it since 2011, to the point where we just said, screw it, we just can't do it for retail. Now, if you look at how many people have got through that process, so you've got the ATSs, so they introduced a new thing called a special purpose broker dealer, SPBD, and they introduced a new virtual asset registration. So they said to all broker dealers, if you're engaging with anything to do with virtual assets, you need to come in. We did that. 2 years later, we're still not there. And in terms of SPBDs, do you know how many of them have been approved? It's a special purpose broker dealer to do what they're asking you to do. 0. None of them have been approved. So they
Guys,
haven't actually approved any of them yet. And
I mean,
is
not
it
just
expensive? Hell yeah! It's 10 million of legal fees to go through 2 years of lawyers fighting through that process.
Simon. Is this not just? I mean, if we call a spade, is this not just rolling out the red carpet for CBDCs and just making it more and more complicated to do anything that could otherwise be considered close to legitimate in this space, especially when it comes to taxation, KYC, and monetary control?
Yeah, so you got to look at the bigger picture. Is the government need tax? They're broke. They're operating a Ponzi scheme. They need to fix that Ponzi scheme, and that requires issuing more treasuries and collecting more tax. They need to collect enough tax in order to pay the interest on their treasury and pay off new investors with old investors' money. So that's the US government's issue. And money laundering requirements happens to conveniently, fit in with that goal of collecting all the data so you can collect all the tax. Now, the ultimate, of course, the end game is, if you think about it, so at the moment, you've got currencies, commodities, and securities. Obviously, a load more, but those are the main categories. And they've said, right, Bitcoin is a security. Bitcoin is a commodity. The dollar is a currency. We haven't allowed any stablecoin to become a currency until the central bank issues it, which is the CBDC play. We allow banks to create money and currency every time they issue a loan, which is fractional reserve. And we're shoehorning everything else into securities now, because we think that these virtual assets, let's call them that, that's what the industry seems to be calling it in regulator world, needs a bunch of disclosures, because they act like securities, but they're actually functioning like currencies. And if you can get sufficiently decentralized, you might be a commodity. So the way the rest of the world is dealing with that is creating virtual asset regimes, which sits in the middle between a currency, a commodity, and a security, which is just saying, make sure you do the whole AML stuff. You are issuing money like a currency. And I think that the next game is to create a new, asset class called virtual asset, and then you need the some of the securities laws disclosures in an appropriate way. But at the moment, they're taking the approach of put it all in securities. But yeah, data collection. The end game is CBDCs takes over stablecoins, and and everything else is a security. And fortunately, proof of work has meant that they can't shut down Bitcoin.
And I hate to go super sky is falling, but if there's an assumption that the FTX crash, not the assumption, the FTX crash was obviously the fraud that was perpetrated isn't blamed on anybody else. That occurred inside of their own company. Obviously, the massive devaluation of the entire ecosystem and what that does to leverage is undeniable. But CZ essentially single-handedly caused FTX to implode. And assuming that was not in the government's best interest for many reasons, if for nothing else, that he was the closest in terms of the poster boy for crypto and DeFi with the US government. The fact that BNB is down over 11% just today, this could be some sort of attempt to slap CZ indirectly if they can't get him directly. especially if what Mario said earlier with regards to an indictment on CZ himself is impending. It just seems a little too coincidental, or I could be over the
So
top, but
that it's interesting, but it's basically the SEC or DOJ or whoever three-letter acronym in the US is playing the role of CZ to crash the coin, and when you crash a coin, it exposes all of the. So what you're saying is CZ
exactly.
might be getting karma from the US government as a result of that. That would be very, very interesting to see. And I think the final stress test of Binance is, could it survive the coin crashing? Then we'd probably know quite a lot about it after that. Because
Well,
is it using the flywheel model of propping up its balance sheet by marking its token to market without discounting? And I guess from my perspective, that's what Paxos would never have known. Because Paxos, I'm sure, in their due diligence requirement, in order to put, to issue billions of dollars, they need to grow comfortable that the balance sheet of Binance doesn't affect anything. And if
exactly.
it turns out that they're marking the token to market without a value at risk discount, like a bank, then this could be their way of exposing it. It all just depends if you believe that they give a shit about consumers or whether they just only care about their Ponzi scheme called the dollar.
So
It's all double
Simon,
standards.
yeah, my thinking here is where they really could get in trouble is if they've been doing what I've been saying, if they've been selling what came into their exchange and buying BNB, and they get hit hard here, it could take down their whole ecosystem. And I'm not, trying to yell fire in a crowded theater, but this is how Binance
You're
could go down, and
yelling.
that's what I think. Sorry, what's that?
You're literally yelling fire in a theater, Catskill. That's what you always do.
No, but listen, I'm a super optimistic person, but the thing is I can only tell you if you have 25, 30 years experience doing something and you can see it's clear fraud, market manipulation, insider trade. I mean, literally every securities violation known to man. If that's your business and you know it really well, goes for anyone. You just can't, like, I can keep telling people until the actual evidence comes out, but I don't know what else to do. And the thing is that this is where the rubber meets the road with this, is that, and I've been saying it before, I think that Binance, and this is what I said it earlier today, I think the tokens that have come into their exchange, they've then turned and bought BNB to prop that up. And now all of a sudden, if they have a problem, then that does turn to a liquidity concern. They may not right now be insolvent, but
Has
in
anyone
2
done a
days
study?
they could be.
Does BNB defy crypto market trends?
It
Yes,
does.
yes.
It's
All the
only
research shows that.
Yeah.
it's
So
down like
I haven't done
half. Yeah, it's down like
I haven't
half
done the
as much as everybody
study,
else.
but you can look at the examiner report for Celsius and see that when the token buying market trends, we learned from that they're using client money in order to prop up the token. Is what we learned. Now it doesn't necessarily mean it's client money, because they could be sat on a massive war chest, and that would depend how much of their token. The difference with Binance is it appears that they have genuine profits, which was the key to the recovery of the Bitfinex scenario. They had genuine profits, but I think what you're arguing is those profits have violated every security law under the sun, and so are those profits to be there in the future?
And if they're holding BNB, then they come off that one for one backing. And this is what I asked in the transparency and the opaqueness. If you deposit ETH or Bitcoin onto Binance, do they have that ETH or Bitcoin, or are they holding it in BNB? And this is what I've been saying for a long time. And again, people aren't raising the red flag. And to me, it's the same little tiny distinction with the Paxos issue, to where, everyone says, oh, well, they have the money, they're holding it. Well, it's not really the same thing. And that's where all these little teeny things, and again, it's to line their pockets and that's where all these problems come in. And
Yeah, well,
so
that's
I can
the
just
big thing
flag
is the
them.
one
Yeah.
is the one-to-one. So
Yes.
if essentially this is where I think the SEC is going, right? If you're not one-to-one, I mean, firstly, if they owe X amount of Binance coin and they've got X amount of Binance coin, that's not normally, that's no issue. The market can crash, can do what it wants. But what I think they're saying is when you combine all these different services together, like if you look at the Celsius Examiner report, there was no distinction between client money and operational funds. So they were spending operational, and FTX, they were spending operational funds as if client money and operational funds were the same thing, which means that you end up in directional risk. And if you end up in directional risk, you end up in Barings Bank, where you can take the whole bank down. And then they're saying essentially the whole damn company becomes a security because no one understands the risk of the individual products that they're investing in. I think that's where it's going.
Agreed.
I want to, Mike. You were one of the early guys to. You and Andrew are probably two of the people that brought the most attention to issues we're discussing now. Andrew, you were one of the first whistleblowers around DCG, and Mike, one of the loudest critics of Binance. You had a lot of concerns. Then we did a space with you, Mike, focusing on Binance, and Andrew, we did a space with you focusing on DCG. So I want to go to you guys, and Fidgetal, I don't know if you were there in those spaces, but they were two of my favorite spaces when we were going through the FTX saga. Mike, maybe we can start with you. What sense do you make out of this recent development from with Paxos and BUSD? And also, I want to add one thing I mentioned earlier, and I had to verify it with another source. Again, this is information that is not confirmed. It is speculative, but this is from two sources now. I'll read out the message. U.S. Department of Justice has now also got an indictment against CZ in the works. I cannot mention the source, and again, this is speculative. I don't have that confirmed. But this is, kind of reminds me of a discussion I was having about a year and a half ago with someone. I had two meetings with them. They're a friend of a friend, and they were being requested to come in as I think it was a chairman of Binance, and they're a regulator, very well respected. They rejected during the bull run. They rejected weeks before FTX collapsed. And I was just saying, guys, what are you doing? Why are you rejecting it? And they said, Murray, there's a lot of eyes on Binance, and obviously we're seeing that now with recent developments. So, Mike, would love your thoughts on what we've seen, what that means for the markets, and what could we see in the next few weeks?
Yeah, thanks, Mario. And again, I want to reiterate, I take no joy in seeing crypto companies have issues like this. I would prefer that this didn't happen. When you go back to November, December, pretty much all of the issues that we spoke about in those spaces have essentially come true. These were all contrarian views that Binance was lending funds, that Binance was redenominating, right? That Binance was commingling the assets, that Binance was under
Have we lost
potential.
Mike, or is that just me?
Are you guys hearing me?
No,
We can hear Mike.
Yeah, we can hear you. Yeah, who can't hear you? Who can't hear Mike?
Yeah,
I can't hear Mike. I'll drop down.
Oh, okay. Sure. All right, cool. Go ahead,
all
Mike.
right. So I think at a high level, the nuance people are missing is they're thinking that, oh, something's wrong with Binance, therefore it has to go down tomorrow. And if it doesn't go down, then any prediction about Binance is wrong. And again, that's a very kind of small minded view. In my view, what matters more is probabilities, right? What matters more is assessing the risk correctly. And what I think is going on now is just this dragnet. That it's a combination of DOJ, SEC, New York Department of Financial Services around all of the ancillary players around Binance, right? And so they haven't announced anything against Binance directly, but what I'm hearing privately is not just that there's a potential indictment coming, but that there's already a settlement in the works. This was as of a couple of weeks ago. The settlement was rumored to be in the $2 billion plus range. I actually asked that 5 times because I thought it would be like $1 billion. I thought $1 billion was a good size settlement, but I'm hearing it could be larger than that, and that would keep any Binance executives out of jail. That would allow Binance US to continue to operate, et cetera. But I think at this point, there's just no way that US regulators can ignore the succession of issues because there's literally like 100 of them, right? We've gone through a bunch of them in spaces before, but Binance has no domicile, it has no CFO, it has no listed investors. There's no way to know essentially what's going on with the capital. It's very clear that they take in deposits and they redenominate them. Thinking back at Celsius is one of the biggest issues that caused kind of this Ponzi scheme type of operation is taking in Ethereum and then redenominating to other assets, hoping to outperform Ethereum. I believe Binance is doing essentially the exact same thing, but they're just much larger and they're less likely to go down in the short term. So I think what I'm looking for is some sort of DOJ settlement announcement in the next, call it month or two, and or some sort of indictment or move against Binance that's more broad. And Paxos is in New York. This is like the big problem with Paxos, right? They're sort of regulated in the U.S. They're supposed to be following all the rules, but then they're associating and doing business with a company that isn't following all the rules. And as I alluded to in the spaces in November, December, that Paxos issued BUSD is not the same thing as the Binance issued BUSD, and people were conflating the two. And I think that's sort of a mismarketing of the product, because I don't think BUSD is fully backed. It's now been proven that, in fact, it was under collateralized by over $1 billion at several times. Reminds me a lot of Tether, to be honest. So I would continue to be careful with Binance. Again, I'm not saying Binance is going down tomorrow. I'm not making any prediction like that. I'm just saying the risk is definitely not aligned with people who are bullish or pro Binance. The risks are definitely negative right now.
Andrew, to go back to the thing that Simon and I were touching on, if this is an attempt to reverse engineer CZ back on himself, if BNB is already down 11% today, if it dropped to, let's say, 40, 50% of its current value, or its value pre its 11% drop, wouldn't that inherently potentially cause, it's kind of like the chicken and the egg, cause the same thing that everybody's afraid that was happening before this instigation occurred?
Right. So just like Mike did, by the way, I think Mike and Simon are two of the smartest guys in the space, so they should be listened to. What I'd say is a couple of things, and I'll get to your question as quickly as I can. One, just like them, I'm a builder in the crypto space. So, I don't like to see any of this. I think it's all enormous overreach by financial regulators, but it's also the real world, and it's also what's actually happening now. So this is not just an SEC thing. This is not just a DOJ thing. This is like 9 agencies working together. The conversations that I've had with people that have attempted to do things the right way, let's Custodia Bank, right, which has spent millions upon millions of dollars to find their way into the right spot in a very, very crypto-friendly state, and then within the Federal Reserve System, just absolutely getting bodied in a way that at the time they thought this doesn't make any sense. So you have the OCC, the DOJ, the SEC, the Federal Reserve, NYDFS, FinCEN. You've got all these organizations working together, and it's not as if all of this is just happening now. This has been in the works for a significant amount of time. Let's call it 2 years. But I would say that the FTX thing, gave them enormous cover to begin to really put all these policies in place. So whether it's clear action that is noted by the mainstream media, Paxos and the like, or whether it's the OCC telling, crypto-friendly banks, you're no longer crypto-friendly, or else you're not going to be a bank anymore. These are all actions that are causing real problems, ultimately in trickling down to an organization like Binance. I'll make one point that I haven't made a ton of times, publicly, but I have made a few times privately. There are other issues geopolitically associated with Binance and CZ. I won't go into real depth there, but you've got a U.S. China thing kind of going on there that can't really be measured, but I think at the same time exists. That in the same way that they would go after Kraken, it's not as if the SEC or the DOJ can go directly after Binance and CZ. It's they're playing a little bit of a tiptoe game. So that's why you see actions like Paxos. That's why you see actions with their U.S.-based partner banks and effectively cutting them off. These are all leading to a larger, potential moment. But the bigger story here is that this isn't slowing down. If anything, this is escalating. It's really remarkable to watch and realize. And I understand. Listen, I'm by the way, I'm a Coinbase customer. I'm a Gemini customer, right? For full disclosure, it's remarkable to watch those organizations flail around and try and figure out what's going on. It's remarkably unfair, but foundationally, and one of the things I do say every couple of days is, listen, there's really not a ton of safe space in crypto right now. The only safe space that really exists is to buy Bitcoin in self custody. Why? Because Bitcoin is it is the regulated entity in this space. Everything else is completely up in the air, unregulated, hoped for. Every other specific um, opportunity in crypto is not where Bitcoin is, and so what you're left with is a lot of question marks. And what exchange do you feel comfortable with right now? I've asked myself that a ton of times over the last several months. Where would I put my capital, on a particular exchange? Right? I have real concerns about Gemini, and that's crazy to me. Right? I mean, the Winklevoss twins, they put enormous effort, spent time in front of congressional committees, yada yada yada, and can't. They're still at enormous risk. Right? So I put up, while everyone else was talking, something that I think is prescient for right now. I put up a little picture of, as a screenshot from Gary Gensler's last video. And on that screenshot, he uses words, and he uses them very clearly, like earn, APY, and rewards. And here's why that's important. And again, I'm a Coinbase customer, okay? If you go to Coinbase's site, their exchange, and you look up USDC and what they're paying, 2% right now, and you drop down and look at the Q&A in there. In the Q&A, they use the terms yield, APY, and earn and rewards in almost every paragraph. They use all four of those. So, I mean, Gary Gensler, for what it's worth, everybody hates the guy right now in crypto, right? He's telegraphing what he's doing. I mean, he's absolutely telegraphing what's going to come. Now, what comes after that? Gary's going to do what he's going to do. A reminder that the SEC is a civil organization. It's not criminal, right? So these organizations can go to court and litigate until they find themselves in a position that is, that's been forced from a legal standpoint. That's not how this is all supposed to work. As everyone has said on this particular space, the SEC should be partnering in some way, by the way, in the way that they seem to be partnering with FTX and Sam Bankman-Fried, which has yet to fully come out. They should be partnering with these organizations in terms of quote unquote, safety for investors, but they don't. They do the opposite of that. They enforce, and enforce, and it's a bad environment. It's a tough environment to try and invest in. And to get to your question about Binance, I think that instead of acting directly and taking a very aggressive stance, indicting CZ, all of those things, I think there are geopolitical stuff there that's a little bit concerning for the United States. But they're doing their best to box them in, right? They're using multiple levers to put Binance in a spot, and to go to Mike's point about a settlement and a big payment, and my guess would be a removal of staking and earn yield type products at Binance US. Wouldn't surprise me at all if that's how it plays out. Um, none of it is good in my mind, the way that it's playing out, but it's also the reality. Obviously, I get a ton of comments about, well, USDC isn't going to get touched and Circle isn't going to get bothered because they're connected to BlackRock. BlackRock would be tripping over nickels to disconnect from USDC, or if USDC had a problem. But they don't care. So there's more to come. The amount of people inside agencies that are chatting and giving up info and are pissed about all of this is significant. But it doesn't mean that they're going to change the course that these organizations are on.
Andrew, can I make one follow-up comment? I
Yeah.
just on your point about whether this is a bad thing for Binance, I actually would view a settlement as quite positive, because it would mean that there wasn't really enough criminality or enough opportunity for the DOJ to just go after them hard. And I actually think the market could rally on news of a settlement, even if it's $2 billion or $3 billion or whatever, the market could actually go up, because it would mean a sort of ring fencing of both criminal and financial liability side of the equation, and also probably put a cap on any additional rolling insolvencies, assuming that Gemini and DCG can work their stuff out, assuming that Crypto.com and Nexo and some of these other guys don't go down this cycle. That would probably be the end of the bear cycle, in the sense that I don't see who else would go under if Binance actually survives any sort of DOJ scrutiny, including a settlement. So that would be just my only point. I could actually see some major Binance announcement that sounds negative initially, and then the market rallies out of that. That's kind of one of my base case assumptions right now.
I would generally agree with that. What I would say is, somebody asked a question, about, hey, let's, it's not necessarily conspiratorial, but is this all heading to a CBDC? I think that's the correct view to take. I think that the way that all of this started, and like I said, this isn't just an FTX reaction that they're now taking all sorts of actions, to try and rein things in. The base case for me here is that they found themselves in a place where they're losing control of money and currency. Right? There's a reason why the OCC is really involved. They're going, at some point there will be a CBDC, and they want the ability to remove competition from that product.
It looks more opportunistic, right? It looks like FTX and Celsius, whether they cause them directly or indirectly, the iron is hot to begin things they were looking to put in motion for a long time, right? CBDCs were a discussion during the Trump administration and before. I do want to point out something super interesting that kind of bumps off of what both of you guys are saying. One is that I believe on the 15th, they're going to be redefining whether custodial actors include trusts or not. So directly to the Paxos issue. If trusts are removed, does that also affect Paxos on our side and then totally kill the issuance of such stable coins? And then with regards to the legal positioning, I always tell people there's a reason why Ripple hasn't settled, and why Tether hasn't settled yet, right? It's because they don't necessarily directly address CBDCs or stablecoins in that regard, right? The Tether issue is not really about the stablecoin issue; it's about whether it had proper reserves.
Sure.
And the Ripple is more about the fact that to settle, which is Ripple's obviously not settling, is that it's the issuance issue, and the reality is to settle anything, they'd have to move out of the country and relist, which would make the government acknowledge that they didn't do an unauthorized securities issue. And so there's a lot of really interesting nuances in how the legal stuff is playing out. But I think, to your point and Mike's point, I think this is incredibly opportunistic towards an inevitable end.
So I think what's going to happen here too is I think stablecoin regulation is going to be one of the first regulations that they come in with. And I think that leads the way, and it precedes the way to the CBDCs. And I also think, same with Mike and Andrew, that, look, even if they, destroy Binance, none of us are going to leave this space. And I think this is all going to be good long term. Could be rocky short term, but this all happened in the TradFi space, and this is nothing new, in terms of all this, fraud and corruption. I mean, this has been around in business and financial markets since the beginning of time. So we're all going to survive this, and I think it's just a matter of how much they come down. And I do think Mike's right. I think it just depends on the severity of, the announcement, what kind of what happens and what else they release as to when they do come out with with their news. And I would expect that the Binance news probably won't be the last news, that stablecoin regulation, and then virtual assets, and then ultimately I think that this is all moving towards CBDCs, the stock market, everything's going to be on chain. And so they're probably looking at the global framework and how to put that together.
Remember,
make this take time.
sorry to interrupt, but remember about 2 weeks ago, Larry Fink, made another claim that he thinks that all assets will be tokenized at some point.
Agreed.
That guy doesn't waste his breath on camera. That he's not in the business of doing that as essentially the CEO of the largest asset manager in the entire universe / all the universes that anybody knows anything about. So you're right. I mean, this is, they're, again, I don't want to put on a tinfoil hat, but there seems to be a process here by which, competition associated with the approved, currencies. Again, the OCC is the Office of the Comptroller of Currency, right? It's not just some weird name associated with, the SEC. It's got a very specific mandate, right?
Andrew, there's one too, that there's a company called Securrency. I don't know. I'm sure Simon's familiar with them, but they have, and I haven't checked on it recently. I haven't looked in a few years, but I got to know them several years ago. But they have what's called a compliance aware token, and I know they filed for a patent on it long ago. I mean, that's ultimately where this is going. The NASDAQ is definitely working on the big exchanges are working on this stuff. And the founder of Securrency, he was the original, I can't remember, chief information officer of the defense intelligence industry. And he got into Bitcoin because they were watching bad guys move money a long time ago. But the point is they really have the compliance nailed in how to handle this globally. And what the compliance aware token basically is at a high level is it understands all the rules and regulations in each domicile, and it precludes and prevents people from trading with each other. And so what that means is that if somebody in the US can trade something or has to be accredited to trade something, but in Canada they don't, then that token will know that, and then there'll be KYC behind that, and then that will be, the exchanges will be plugged into that, and it will allow who can trade with who, and it will stop people that say aren't accredited in the US from being able to buy that same token. So I'm just giving you idea where I think this is ultimately going. And the point of me saying this is that Securrency started in like 2015 or 2016, and their Wisdom Tree, which is one of the largest ETF companies, or the largest, that's their largest investor. I know NASDAQ Ventures didn't end up investing in them, but they were super, super close. And all I'm saying is, like, to your point of Larry Fink, like BlackRock, the big guys are here. We just don't know about it unless you're talking to them directly, or unless you're picking up on the little statements like you're saying. And I think that's where this is. That's where this is ultimately going. Is the big guys are going to take over,
and the big guys like to make the rules, right? I mean, that's just the truth and the reality of it. And it's, I guess, the one positive, if you go up to 50,000 feet and you're looking at a decent amount of carnage right now, is to some degree this is the truth of, they haven't figured out how to kill Bitcoin. No matter how many times they've tried, they're now admitting they can't. So let's kill as much as we can other than that, so we can remake all the rules in any way that we want. But that we can't do that. So I get a lot of questions about, Bitcoin goes up and down, and how is that how do you just buy Bitcoin in self-custody? Well, listen, in this current environment, if you're going to stay in quote unquote a digital asset of any kind, it's the one that is, it's not going to get a Wells notice. They're not going to be sitting in it, in a courtroom at some point. That's the only one, right? So, it's the reason why that narrative isn't going to change.
Simon,
the reason the reason this is a CBDC play is, if it wasn't, Libra would exist today.
Correct.
So if you look at what happened from Libra announcement, so firstly they said we'll create a world currency. they left out the Chinese yuan strategically because they knew that would never fly. But then they had to pivot to a basket of currencies and stablecoins, and then that would never fly. They got 2.96 billion users now. But that led to two things. It later led to the US executive order for the which was really about figure out how we regulate all of the different parts of the existing ecosystem and then launch FedCoin. And China reacted to it in a when Libra was left out of the basket of currencies, they said, well, we're in the IMF's SDR, but we're not in Libra's. They started picking up all of the development for DCEP again. So DCEP is their CBDC. They've already got 220 million wallets. They've done $15 billion of transactions in beta. They've got 1.7 billion people on WeChat and Alipay. Those are integrated with DCEP already. They got the Belt and Road Initiative that's already lending more money than the IMF. They'll tie all of the loans from the Belt and Road Initiative will be tied to DCEP adoption. China wants that world reserve currency. The US executive order for me was just take all of the existing shit, put it in a box, figure out what regulator it is, figure out how we tax it all so that we can get enough money for our US dollar Ponzi scheme. And then FedCoin is the only solution to the over leverage in the banking system, because the only way you can't have the too big to fail banks, but you can let them fail and replace all their deposits with a CBDC. And so that's the overarching game here. And stable coins were, look at the 2008 financial crisis. That was all of the decisions of who to let go bust and who to bail out was made by Larry Finn and the BlackRock Aladdin artificial intelligent algorithm. So they've already got the technology behind it, and all of the Fed is already using BlackRock's infrastructure for it. So it's all coming. There's no doubt about it.
Not to derail for a second, but I have to have a little NFT moment for all the NFT people in the space. Andrew, you point out something super interesting. And this is not actually JPEGs. This is the legal implications and how Bitcoin differentiates from all other cryptos and DeFi. Is you mentioned the inability to have a Wells letter, which is the ability to, essentially, for those who don't know, the ability to pre-negotiate a lawsuit before it gets filed, essentially, at the end of the day. NFTs have just recently moved over into this new Bitcoin ordinal stuff, which is inscribing on Satoshis. But the interesting part of it is the purely decentralized nature, where if people infringe on IP, who are you going to send a cease and desist to, right? The issues of chains going down or reliance on third parties, which is essentially what this is in terms of a DeFi perspective, goes out the window when you go back to Bitcoin. Just a really interesting correlation between the first and the best. And I'm not a maxi by any means. This is just a really interesting analysis. When you get down to it, this is all intentionally originally supposed to be about pure decentralization and peer-to-peer and trustless nature, ZKs and all that stuff. It's funny how as crypto expanded into DeFi and caused all these unintended leverage issues, the same thing is happening in an NFT perspective, and it always comes back to Bitcoin has, regardless of whether it's a store of value or a peer-to-peer transaction layer, at the end of the day, it's decentralized, purely decentralized and distributed nature makes it immune to a lot of the things that the government can control. So it's really interesting to come back. So sorry to circle around. It's just when I often host these NFT spaces and we get into the weeds about, kind of like the exact same thing, like Celsius and is it a currency or a commodity or a security? At the end of the day, Bitcoin does offer this almost impenetrable immunity to these attacks and to the risks to a large degree, right? So just an interesting.
It's really great. It's really great to have Bitcoin maxis in this space. Thank you so much, Digital. It's awesome.
The
It's
proof of work blockchain is the only mechanism for combating CBDCs. You know, Ethereum, when they switched to proof of stake, immediately they knew that everyone was going to stake at the exchanges, and so we just say that proof of stake as a service is a security. So okay, it's captured. But the only mechanism is the proof of work blockchain that we will never repeat again. It's a one-off freak exercise, and it's the only thing that gives us any hope of freedom in the future, from my perspective.
it's
I'm
it's
gonna
the
get
ultimate,
killed.
yeah, it's the ultimate proof of work in that the governments across the globe have effectively giving up have given up on trying to stop or blunt Bitcoin. They've realized it can't happen, and so that frankly is the ultimate proof of work. And so now instead, they're going after everything that isn't Bitcoin in every possible way, and that will continue until they've decided that the rules now work the way that they want them to work. But the only outlier to that will be Bitcoin.
And that's also because,
I,
sorry to cut you off, but
I want to point out real quick that the global hash rate for Bitcoin is sitting right near an all-time high, just over 300 exahash. So in spite of all of the drama related to centralized companies and all the BS related to the government intervention, the hash rate is growing and miners are continuing to invest. And that's part of what enables proof of work, right? We have these large scale industrial miners now that are operating all over the world in a decentralized way, not coordinating with each other, building out data centers. It's very similar to the building out of the internet data center model in 2000 to 2003. The internet stocks were collapsing, but the data center providers were building up their
Right.
capacity. Some of those firms, like Equinix, they actually went up 300x over 20 years. I think Bitcoin miners are doing something very similar, because if you really believe in the decentralized nature of Bitcoin, and you believe that the government can't censor you or stop you from transacting, that has to be enabled by increasing data center capacity globally. And so I just think that business model, especially right now, given that we just went through a huge drawdown in the NASDAQ last year and risk assets are down a lot, those companies are trading like they don't matter. But literally everything that Fidgetal just said is enabled by some of these mining companies. So that's a space that I think more people should be paying attention to if you're bullish on Bitcoin.
It's
And
funny.
one of those proof of work miners as well is BlackRock. So BlackRock said if you can't beat them, join them. So they are one of those miners.
that's just
What do you mean by that, Simon? They're an investor through their index funds in a number of publicly traded Bitcoin miners. You're saying they're running machines themselves? I'm not aware of that.
No, there's I read announcements that they're actually getting into the mining side itself. Is it beyond just the public investments that they've made?
I think we would need to see that announcement, because look, BlackRock owns a large stake in, I think, Riot and Marathon, but basically index fund providers own large stakes in everything, and so they're not actually like thinking about anything. They're just according to the index, they're just allocating. I think it's very unlikely that BlackRock will be mining directly in the next couple of years. But what we're seeing is some of the lenders become miners, right? Like NYDIG, where I used to work, I was head of strategy there a couple of years ago and helped them build out their mining business. They lent hundreds of millions of dollars to miners. They had to foreclose on some of those miners. And instead of selling them, they're literally just plugging them in and becoming a miner themselves, which is what you always see at the bottom of the cycle. So I just feel like it's the bottom of the cycle environment right now. I expect a handful of additional problems like Binance and Paxos and the Kraken issue, and probably more fighting with Coinbase, more fighting with GBTC related issues. But all of these things are bottom signs to me now, not top signs.
And that's why we always see when these things happen, the discussion always comes back to Bitcoin, right? Because there's no profit motive in the middle of it. Like obviously people buy and they say number go up, but there's no entity saying, okay, we can get rich with this unless they participate in the network. So we can disagree with the SEC and their enforcement strategy, and it's all over the map and there's no guidance. But at the end of the day, they're looking for disgorgement penalties, right? And so they're looking for entities that manage to make millions and millions and millions of dollars. And where do those millions of dollars come from? Us, right? So, this is a negative externality on the space. And unless these entities that are getting sued are actually looking out for the people, they're only looking out for themselves. And at the end of the day, they're looking to replace the centralized banks in a way, and they're going to make the same skim. And so we should be vigilant as a community, as a Web3 group of people, about what they're doing. It's a little unfortunate that the vigilance is coming from these unelected officials who think they understand what's going on, but I can at least understand why they see such a ripe avenue for enforcement.
Hey, bringing it back to Paxos and Binance, one of the things that we should be tracking a bit more is the Silvergate story. It hasn't got enough attention. If Paxos works the way it's meant to work, then they would have set up individual trusts that would only have FDIC insurance exposure. So each bank account for each trust would only have up to 250,000, and then the rest would obviously be in non-bank securities like treasuries and various other things. But Silvergate is a fractional reserve bank, and they have lost significant deposits, and their share price. I haven't looked at it for a while actually, but last time I looked, they were about $13 from a high of, I think, about $200. That's their original IPO price, but they've had a significant bleed of assets, and I think their deposits are down to about $3.5 billion last time I looked. That is that is the backbone of USDC, Coinbase, many of the other exchanges. So we need to really monitor that relationship between these traditional
Simon,
fractional reserve banks.
that's a huge issue because it's not just Silvergate, it's also Signature Bank and any other banks that have been trying to bank crypto companies. They're essentially, for risk management reasons, if they didn't get blown up the way Silvergate did, they're proactively reducing exposure. And so, like, to me, that's a big problem for the space. There's the banking issue, and then there's the audit issue. Amarino, for example, who was FTX's auditor, is now informing their clients that they're no longer going to be able to audit them, right? And so they're trying to refer their clients to other people, but there are just very few auditors left who want to touch the space, and there are very few banks left. And so for the centralized company space, it's going to be quite challenging, right? Because it's going to be very hard to find a bank to bank you. It's going to be very hard to find an auditor if you get big enough that you'd want to get an audit done. And I think it's going to slow down kind of the centralized development. It doesn't mean that necessarily Bitcoin or Ethereum stops growing, but it definitely means it's going to be a tough slog for centralized companies in this space over the next year.
So that's always been the biggest issue that I've had is this should be the easiest space to audit in the world, right? Everything's on chain, or it should be. Audits should be not only easy and cheap, it should be the push of a button, right? You should be able to snapshot and pull every piece of data and know everything. All you need to do is organize it, collate it, and you could automate that as well. So the fact that this is quote unquote unauditable, or that auditing companies are staying away from it, for me, is probably the largest red flag I've heard since day one. FTX, everybody.
Yeah, I mean, the issue is that in the traditional system, you're especially with companies that are domiciled in one country, you're only using one unit of account, right? So if you're a dollarized company trading in the U.S. or doing business in the U.S., it's quite easy to audit because almost all of your transactions are happening via EFT, check, and wire, all within the U.S. banking system, all in U.S. dollars. The challenge with crypto is people have hundreds, if not thousands, of wallets, and the transfers between them are not always clearly understood, clearly labeled, and you're changing denominations. Binance, for example, probably has several thousand denominations, right, of tokens, including tokens that barely even trade anymore, but are still held. Remnants of those tokens are still held in a lot of user accounts. And so it's really hard from a flow of funds standpoint to understand like what came in, where did it go, where does it come out of that system? And that's where a lot of the shenanigans happen. It's in that denomination issue. If you just denominate in US dollars and you're audited in the US, super easy. If you have thousands of denominations and you're supposedly everywhere, an audit is quite tricky. So I wouldn't blame the auditors. I don't blame the auditors personally, right, for doing that. But I just think it's an evolving challenge because even good companies are going to struggle, right? It's not just Binance can't get an auditor because people are afraid of literally blowing up their entire business, putting a rubber stamp on a shit show, right? But good companies that actually probably should get audited also are going to have trouble finding an auditor because of the same issues, right? The reputational issues, et cetera.
I mean, I just
also
heard.
it opens up the attack vector of saying everything's on a blockchain. We saw this with all the proof of reserves, right? There's the illusion of decentralization because you can check it on a blockchain, but nobody knows what legal contract existed on top of those assets. So exchanges could be borrowing each other's proof of reserves. And while it's a massive improvement being able to see and detect such behavior in the blockchain, but you can always have legal contracts that sit on top, which is what we saw with some of
Yeah,
those companies.
it's not a silver bullet, and it's not even the legal contracts. It's all of these side undocumented relationships, all of the transfers in and out, like Justin Sun sending money like hundreds of billions of dollars of stable coins into Binance and then out of Binance and then into Huobi and then out of Huobi and then to Tether. Tether's back, right, in the mix. And so like I don't even think most of these things are documented. There's no proof of exactly what's going on. It just looks weird because it doesn't look like anything that a sort of reputable firm or person would do regularly, right? Like there's no explanation that like really makes sense.
Yeah, I mean, I just got a notice that apparently one trader, some whale, made $5.5 million in less than 3 months, literally just looping ETH on AVAX, borrowing STETH, and then putting into ETH, borrowing ETH, turning it STETH. So, I mean, there's so many gaps. It sounds like just fluctuations in between valuations is what you're getting at essentially, and that those fluctuations make it almost impossible to audit.
Yeah, there's a lot of arbitrage opportunities because the assets trade at different valuation depending on where they're being held or where they're being traded, right? Not just between like the obvious ones, like between Binance and smaller exchanges, but between like true DeFi and centralized trading, right? And so there's arbitrages there. These things shouldn't exist in an efficient market. Obviously, this market is not evolved enough. There aren't enough sophisticated players. There isn't enough capital. There's actually a lack of capital in a sense, which is part of where all the distress has come from, right? Like multiple firms have holes in their balance sheet because they essentially took capital, gave it to someone else who gave it to someone else, right? So Gemini took in money from customers and then they gave it to DCG and Genesis, and then Genesis turned around and gave it to Three Arrows Capital, right? And other people. And so like at the end of that sort of daisy chain, there's somebody who thinks they own capital, but it's already been hypothecated and rehypothecated multiple times. And I think that's still like going on, right? Don't let this rally year to date fool you, right? Like none of that stuff has really been fully worked out. It doesn't mean we have to go a lot lower. It doesn't mean Binance goes to zero. Like that's where people get this wrong. But it does mean that there's more issues here. And I want to make one other point I think is important from a nuance standpoint, and that is that you can point out Binance's issues and say, hey, look, there are real severe issues here that could impact consumers at some point without necessarily saying you think the SEC is great or the DOJ is great. Like I think the SEC has been way behind the eight ball. They've made a number of huge mistakes. They continue to kind of screw things up. But that doesn't mean that I think all of the centralized companies who are saying it's all FOMO are good actors either, right? Like I think Binance is a real problem. Binance does need to address the problems and they need to fix them over time. But that doesn't mean I'm like rooting for the SEC or DOJ. Like nobody in crypto who really believes in the long-term decentralized opportunity of sort of Bitcoin and ETH and a few other things is sitting around going, hey, let's have it all be owned by the US government and BlackRock. Like that's not a good outcome either.
I agree, and not to be the conspiracy theorist again, but what Simon and I and the panel were talking about earlier, when the FTX issue came down and CZ said they were fully collateralized, there was no issues, right? It does seem that these plays, specifically aimed at Binance, there's a lot of issuers or exchanges that could have been in the same crosshairs. It's not for lack of specificity that Binance specifically was targeted here. And it's also not for lack of specificity that CZ's tweet this morning very calmly just said, we have nothing to do with Paxos. There's nothing to worry about. And we're basically fine. It does seem like there's a bit of a cat and mouse game being played. And I wouldn't put it past the U.S. government to be trying to expose the Binance balance sheets just for the simple fact that they said there's no issue. So I can't ignore that fact.
You know, it's funny. CZ blocked me recently for just telling it like it is. So I didn't see that tweet, and I don't lurk around his page. But I do remember as recently as December, Binance calling out their relationship with Paxos as a positive, right? Because Binance is aware that Paxos in the U.S. has at least some regulatory brand and some trust with consumers, given that they have a New York trust license, right, and they're registered with the New York FDS and all this stuff. But it's funny that as soon as Paxos is under investigation, ostensibly for their relationship with Binance, then Binance disavows all sort of relationship and all exposure to Paxos, which is the exact opposite of where I see the risk here. I do think Paxos, doing business with Binance is a risk to Paxos customers. And so them saying they're no longer going to issue new BUSD, I think that sort of ring fences the risk around what could happen to Paxos in the future. But I find it laughable that Binance is trying to disavow their relationship with Paxos. Sort of like when the Bits Lotto thing came down, that was really stupid. But it was, they're one of the big counterparties, right? Like Binance is one of the biggest counterparties for Bits Lotto. And it's funny that Binance is like, oh, we were so helpful to the authorities about Bits Lotto. I'm like, I don't think you were really that helpful, right? Like, there's so many misdirection. PR team, it's really quite incredible.
I don't think it's fair to say that Binance have said anything different today than they've always said. Paxos has always managed BUSD. That's never been a secret. It's always been done in a hands-off way. It's accounted for and attested every month. It's backed 1-to-1 by US Treasuries. CZ today was really just confirming that. I think, what do people think about the bigger, I don't know if I missed this at the beginning of the spaces, but the bigger question of saying that a stable coin is a security, especially when it's a stable coin that's backed 1-to-1, pretty much by US Treasuries on the whole and cash. Do people invest in BUSD expecting gains or risking losses when it is backed and attested every single month by Withams that those coins are backed 1-to-1? I think that's a big question, because if the SEC can just wake up one morning and decide that a stablecoin backed 1-to-1 with US Treasury bills is a security, what are the wider connotations? There was some, obviously, in the last couple of weeks, there's been a lot of objections about the SEC effectively enforcing rules on crypto that they've never disclosed. So they suddenly just wake up one morning and decide to enforce something. But how are crypto companies supposed to follow rules when they don't know what the rules are? I think this is one of the biggest issues. And just sort of to close off my point, I actually think, look, ultimately, as long as we live under government, our finances are ultimately going to be regulated. There's a lot of catching up to do with crypto. Binance, as we're talking about, Binance is, approved, authorized in around a dozen other countries. I do agree with Mike that ultimately a fine and then sort of forcing them through a regulatory process, not just for Binance, but for anyone who wishes to effectively operate with US customers, is going to be a short-term pain for long-term gain. I actually think that effectively, ultimately any crypto or token or whatever you want to call them who want to operate with US customers in the long term is going to end up being to some degree regulated by the SEC. And then ironically, that leaves Bitcoin as being the only entity that has no checks and controls. So it may end up being that those other tokens, develop much more fundamental value in the long term because they can be incorporated into the US financial system, whereas Bitcoin may not be able to because there's no one to regulate. I think we're all kidding ourselves if we think that ultimately the US aren't going to regulate, pretty much any token that can be drawn out and used in the US. And by that, I mean, you can use crypto all you like until you want to spend it on real things. If you want to spend it on your debit card or buy a house of it or a car, particularly in the US, that's what the US government are going to keep an eye on eventually. And if Bitcoin ultimately ends up being the only token that they can't regulate, then it's going to be the only token that can't be drawn into day-to-day life.
They regulate it
in
as
the
a
US.
commodity. They already do. They regulate it as a commodity.
Well, no, it's a fair point, Simon. I'm just saying that, I feel that, ultimately it will be good for all tokens, all exchanges, all parts of the crypto ecosystem for it to be fully regulated, because then we're just not going to have these barriers to entry. And I know it defeats the object of decentralization, but I think if we, unfortunately, it's just not going to be the case that governments are going to allow a financial system. And I'm not saying that I agree with this, but governments are just not allow a financial system to develop independently of regulation. Yeah, it is artificial.
Then they need to ban commodities. They need to ban gold.
No, I'm saying that they're not going to allow this new financial system to build up unregulated. That's all I believe, and they're not going to allow it to be fully integrated into society without checks and balances.
Yeah,
But
they do.
once that
If
happens,
you convert Bitcoin to gold, if you convert Bitcoin to dollars, you have to go through all the regulations. It is regulated. It's just
the
it's the commodity,
actual
the decentralization. You're kind of conflating issuing, creating something and issuing it as a security with having this thing that exists in through, that's where the whole distinction between commodities, currencies, securities,
Yeah, no,
and
it's a good point, and it may ultimately end up that Bitcoin is the only one that's recognized as a commodity because it's not controlled, whereas all the others will be seen as some kind of financial instrument or currency or token or whatever it might be. So I agree that there's going to be this disconnect between Bitcoin and everything else. I don't see that being a good thing for Bitcoin personally. I still there's nothing behind Bitcoin to build fundamental value beyond people who believe in it, and it's it's quite obvious that if
That's completely untrue if you understand proof of work. So like you have to use a lot of energy to create new Bitcoin. It's not like a token you can just create out of thin
a
air.
positive. You can sell that as a
No, you're
positive,
you're
but
you're you're talking through the ESG left wing kind of viewpoints. That's fine.
no,
I
Mike,
don't. Yeah, that's fine. No, no, no,
you
no.
don't have
But
to turn everything into politics, Mike.
yeah,
It's ridiculous. It's
but you don't
ridiculous.
understand
Absolutely
how
ridiculous.
you. No, no, Sam, you don't understand how.
Wasting
Hold
energy
on.
mining
It's not.
Bitcoin is not a positive, man. It's not a positive.
Sam,
We're in a world where that's ridiculous.
will you let me speak, or are you just going to keep going? Like literally, the entire time we were talking about Bitcoin being positive, the only reason why it works the way it does and it can't be censored, and it can't be changed, and it can't be taken over by somebody is because of proof of work. And so, if you don't understand that, then like there's nothing to talk about. But it's not a waste of energy to use a dishwasher, to drive a car, to fly in an airplane. These are things that we choose as a society that we
Yeah, and
want
you
to
know what
use.
else, Mike?
I want,
We don't use the
hold on. Let me,
same. We don't use the same
Sam, let
dishwashers
me
that were
finish it. You're
built
just
20
going to
years
talk
ago.
over me. I'm going to talk over you.
That
Sam,
technology
Sam, you can't keep,
progresses.
Guys, civility, please.
yeah, you're being really
Okay,
rude
man.
though. Let me finish, Sam,
Yep.
let me finish my point before you jump down my throat. Otherwise, there's no fucking reason to talk to you. You're just wasting time. So we choose to use a toaster, a dishwasher, air conditioning, right? We choose to use electronics. We choose to fly. These are all innovations that, as a society, we've decided to use more energy for. I believe that sound money that can't be disrupted by the government, that can't be censored, that can't be stolen from you, Bitcoin and cold storage, is worth expending energy on. And furthermore, companies that are providing that hash power to support the Bitcoin network are doing so in a way that actually makes the grid more anti-fragile because they are the buyers of last resort in a lot of these power markets, particularly the deregulated ones in the US, where there's just 20, 30, 50 gigawatts of wasted renewable power that's not being used because there's no way to get it to the load centers. These are the parts that the left wing and the sort of
Mike, don't make this
Web3
political.
decentralized
Don't
people.
throw
Hold on, let
politics
me
at me,
finish.
man.
Yeah, but you have the same bullshit talking points that actually aren't backed by
Well, let
any
me
science or
respond then.
facts.
Let me respond,
Period.
and don't move to politics. Let me respond.
You're
Everything you
not saying
named,
anything factual.
Mike.
You're
You
not saying anything factual.
don't talk about politics. I'm sick of everything having to be bloody political, man. It's ridiculous. Stop
All
doing
right,
this
I'm
left
out, guys.
right
This
thing.
is this conversation
Listen,
is
let
a
me
total
carry on.
waste of time.
Let me
See you
carry
guys.
on. Everything you named there. Everything you named is a technology that progresses and changes and updates and evolved. Okay, Bitcoin isn't. Everything you named there, that toasters and cars, these things evolve, they improve, they become more efficient over time, they work better. Bitcoin doesn't. Bitcoin, was the first crypto. Great. It was an experiment. It's out in the wild now, but it's it's going to lose its relevance over time as the industry progresses and evolves, just like the electronics industry and every other industry you mentioned there. That's the point I'm trying to make. It's very difficult talking to Bitcoin maxis about logical things.
The one thing I would add to this discussion, which is veering off topic from the header, is that when it comes to Bitcoin and when it comes to the transfer of value, like one thing that is important about proof of work is that value has to touch the physical world on some level. Like the Bitcoin was created because value was being passed around that was being created out of thin air. And so in a way, to have value tethered to energy, and this is coming from someone who believes deeply in the necessity of preserving the environment, by the way, without having some kind of tether between our value system and things that actually touch the physical world, then you do end up with rampant spending, you end up with all sorts of other things that negatively impact the environment, et cetera, et cetera. But with regard to the issuance of coins by new entities and stuff like this with the Howey test, remember that the Howey test only deals with investment contracts, which is one category of securities. So the SEC is regulating this probably from another angle where the expectation of profit is not concerned, like a money market or something. So
Peter, that's why I brought up the Reeves test earlier. It's a combination of the two.
yeah, exactly.
That
People are fired up. Oh my God, the expectation of profit with a stablecoin. That's completely irrelevant to the analysis here. And so, as ever, we should be suspicious of people that defend centralized entities that aim to make a profit by selling a token or a coin that they created, period. And although
But we should also be suspicious of influencers shilling Bitcoin because they hold a load of it. And just to say that just because it uses energy, it has a fundamental value is a very weak argument, because that's the argument. It uses a lot of energy, so it must have value. You know, we've tried to evolve as a society to make things that use too much energy have less value because we're becoming more efficient. You know, these are things I'm saying. It's like Mike can come on here and FUD everything he wants for hours, and then he leaves as soon as someone pushes back on his points. This is not how you have a debate. You know, we could have discussed it, but you know, that's sadly the reality of every conversation.
Well, I mean, but
first of all, I didn't know this was an issue, and I went to the bathroom for 1 second, and I came back, and the kids were out. And it's sad that Mike left from the conversation, because I would have actually liked to have had a civil conversation about I think a couple things that are really important here. First, being not just whether it's directly tethered to tangible assets, and we can have conversations about what value really is, and do we need third parties, because I think that implicates a government. The difference really is just the guarantee behind it without being tethered to gold and tangible value. And the difference between centralized actors in between the process, much like a government, that Bitcoin inherently doesn't have. And again, I'll push back against both sides. When somebody pumps a Bitcoin, at least there isn't an intermediary slicing off money and leveraging. So there's a difference, I think, fundamentally there. But I think what we're getting at, specifically with Binance and third-party intermediaries, specifically centralized, is the same issues we have with regular banking, which I don't think anybody would say is a good thing, right? There's a reason why Bitcoin came out of 2008, when we had over leverage, and people like my cousin sold leverage analysis packets to the exact institutions, in fact, their own institutions that didn't understand their actual leverage. So I think the issue is centralization and the DeFi systems that create real issues in an unregistered ecosystem. I think that's the core of what we're getting at. Umbrella, you had your hand up, please.
Yeah, can you hear me?
You're good, brother.
Digital?
Yeah, I can hear you, my dude.
You might not be able to hear Phygital. We can all hear you.
We can hear you.
Rebut Sam's argument that kind of the only thing that Bitcoin